This is episode 190 of Zen and the Art of Real Estate Investing with my guest, Zihao Wang. Zihao is the founder and CEO at Motiva Holdings. Motiva Holdings is a California-based real estate private equity firm focused on developing value-add and opportunistic, I'm going to talk to you about that, multifamily real estate opportunities through equity syndications and JV partnerships. Zihao, welcome to the show.
Thank you so much for having me, Jonathan.
Yeah, I'm really excited to talk to you. I love talking syndications, but I really love talking real estate in the background. And I know you got started with your family. So tell me the first time that you remember being involved in real estate, because I know it was when you were young.
Yeah, I got started when I was around 13, 14 years old. My parents originally made their money in the fashion industry, started in the late 1900s, started in manufacturing in China, and then moved to the US in the early 2000s to start their own brand in fashion. It's still an active business today, but I think, after they moved here and made some money, they diversified into investing into real estate.
Yeah.
And as that portfolio grew, they knew one day they wanted me to get into the finance and investing world. So I joined in 2016 as a property manager.
Oh, wow.
Just on the, on our family's assets. And they made sure I knew how to do everything though, learn everything, the days in, days out of operations.
Yeah.
And then moved me did that for 2 years and then moved me on to the acquisitions and capital market side. And so now I'm more of a high level, finding deals, raising equity kind of person now.
How were you able to stick with it in California? It's a different market. I think people think, oh, California's tough. When you're in the large scale multifamily, it's a little different type of market. I mean, the cap rates are very, very low compared to other areas, but your appreciation and potential for redevelopment or reuse is extremely high, as well as appreciation. How have you been able to stick with it in California when others were just like, again, focusing on all the other areas or headed to the Midwest?
I think the mentality of investing is a little bit different. So we're not big like cash flow people that we need like a monthly or quarterly check or whatever.
Yeah.
We're more like, okay, so if we buy an asset today, what's it going to be worth in 5 years? And we do our renovations and, boost the NOI. And that gap is much bigger in California than it is in, like, for example, Midwest or other areas of Sunbelt, right? And so, oftentimes we buy in probably 100 basis points lower from a cap rate perspective than other states. But then when we sell, we're also able to, sometimes even compress that cap rate more in a good market than other states as well.
Yeah, I think that the premier product, when you go out with the finished product, is even more exciting in an area like California, because you do have big money coming in. So a lot of that big money is looking for something that's already is complete. There's people buying those. They don't want to go do the, what you guys have done to do the value add to get the value up. They just want to buy the cash flowing product in the end, which does turn out to be a cash flowing product. Maybe not the same as the Midwest, but also still appreciating. So you guys win, they win also in the long term.
Yeah, if you look at like statistics, like I think California is one of the biggest presence with 1031 money. A lot of foreign money and also kind of retired money comes into California for the good weather. They want to be close to their assets, and assets value usually stay high even in downturns here.
Yeah.
So for a finished product, we treat it kind of like a bond, potentially like a 5.5 cap bond. And then they can hold it. Nothing will really go wrong with that in California. One thing that I'm looking into and I hear a lot when I go to conferences, I think is small bay industrial. So that's something I'm looking into and seeing if that works. I've never done it before. So talking to a lot of people, ears wide open and trying to learn as much as possible.
Yeah, I really like the idea of industrial flex. We've had a few industrial episodes, and I was a partner in industrial for over 20 or 30 years. I just think it provides that kind of like slidability of assets now, because what I saw with mine was originally it was just typical industrial, but then over time, where we were in Long Island, it was like no one wanted to be on Main Street anymore. So they started moving cooler type of businesses to industrial, and we're looking around like, this kind of feels like, what a general strip mall would feel like, but higher end, but it's still in this industrial area where you have a ton of parking. And then I saw it in California over the years, taking my kids out there and seeing my sister. A lot of the pop-up stuff for kids is all in industrial areas. You're like, hey,
Right.
where are we going to this trampoline park? I don't even know where this is. And you're going down all these weird, corridors. And then you're like, oh, wait, here it is. Cause it's a giant building that doesn't cost a lot to build. It's going to make a lot of income.
Exactly. Yeah. And it still has the operational flexibility to do
Yeah.
things. So it's something I'm looking into, and I'll let you know if I decide to go with it.
What's your main thing now for Motiva? Are you looking to expand into new markets or expand inside those markets that you just have a little bit in, Sunbelt, Texas type of areas?
Yeah, so we want to do our first acquisition in Texas. We're still kind of expanding slowly in California because we already have a pretty big portfolio here, and we don't just want to, stop. We know where the good pockets are, and we have local boots on the ground here. So I think that's something we can leverage. But
Yeah.
I'm probably gonna take a little bit. We have a team of 10 already here, so I'm probably gonna have other people handle more of the operations in California. They're very experienced to do so as well.
Yeah.
And I'm probably going to be exploring different markets to see where the next opportunity is. Yeah, it's kind of a two goals for us.
Yeah. Are there any other states out there that you haven't even really vetted that at least are like a little bit piquing your interest based on stuff that you looked at besides the one that we've talked about?
You know, I've looked in, so I've seen like kind of the rental fluctuations of recent years, and it seems like
Yeah.
Midwest is getting their fair share of attention now. With Sunbelt kind of slowing with all the rental supply.
Yeah.
I just haven't really researched too much into the Midwest. I think the general consensus, if you go to like a conference, is that like Midwest to the Sunbelt people can be very boring and not very like appreciative.
Yeah.
I still got to look into kind of the Midwest and see where that's heading.
Yeah.
But from my primary focus has been in the Sun Belt and the Smile states.